Good afternoon to everyone in London and Moscow, or from wherever you are dialing in from, and a very belated Happy New Year, and a warm welcome to the first Economic Outlook of 2021. My name's Alf Torrance, I'm the Executive Director of the RBCC, and I can't think of a better way of kickstarting the year than with an economic update. I'm delighted to welcome back Chris Wiefer, CEO and General Director of Macro Advisory, for today's discussion. Thank you as well to all RBCC members and friends who have taken the time to participate in today's discussion. Before we get into it, I'd like to welcome the most recent companies to join the chamber. That's PwC and RNG Oil. Very warm welcome to you both, and we look forward to working with you over the coming year. Before we get started, as always, a short explanation as to how today's webinar will run. After I finish, Chris will make his presentation using PowerPoint, and I'm sure many of you will want to put questions to him afterwards. Please use the chat room function to do so. We'll monitor the chat room and we'll try to pick out some of the more popular themes. If you want to ask Chris a question directly, please do so, but use the hands up function so that I can see you actually want to ask a question. Can I ask you all to keep yourselves on mute, of course, unless of course you're asking a question, and then please remember to mute yourself again when we've finished. We will be recording the webinar and we'll post it online either today or tomorrow morning. We'll also post Chris's PowerPoint presentation if he's okay with that, and we'll send it out to you should you wish. I hope that's all clear. Chris will be known to most of you as he's a highly respected economist who's been observing the Russo-British relationship for many years now. Chris was chief strategist at Sberbank CIB and held similar positions at Uralsib Financial Corporation and Alpha Bank. In 2013, he decided to go solo and set up Macro Advisory, and he's now the author of a wide variety of published articles about Russia and the wider region. Chris, Happy New Year again. Delighted that you're here with us, and we're very much looking forward to hearing your thoughts about 2021, after which has been a pretty awful 2020 for the vast majority of companies. Chris, over to you.
Thank you very much, Alf, and good day to everybody. I've got a presentation which, as Alf mentioned, will be available to everybody afterwards, either directly or download online. I'm now going to do the usual and try and get it up on the screen, so just bear with me for a second while I go through. Hopefully it works okay. Share, and I know I've got to press a button that will get it onto the larger screen, which I've just done, and hopefully that will set it up. And hopefully is that now showing? Sorry, just as the main screen. Yeah,
we can see it, but it's
okay. Yeah. Now I got it. Okay, that's it. Sorry, it's not too bad. I thankfully went through it with James yesterday. So now we can start. So yeah, as you say, 2020, I suppose the polite way to say it was clearly a challenging year. Just no need to go through. Everybody lived through it, but at least what we can say, kind of in one line about Russia as we come into 2021, Russia survived. In terms of the country, social structures, economics, business survived relatively well. A very difficult year. And partly that's because of the structure of the Russian economy, which is kind of negative in terms of generating long-term growth because it's skewed so much towards big companies, towards the states, and it's got relatively little content in SMEs and services. But in a crisis year, that of course helps you mathematically. So we can say at least Russia, as we came out of 2020, coming into 2021, Russia is in a relatively more stable position than many other countries. So and of course that's what I start off with. It was relatively mild. We haven't yet had the full numbers for 2020, but it will be somewhere between -3.5 and -4 in terms of GDP, probably closer to the -3.5. We had the industrial production numbers yesterday, which were expected to be over 4% down, and it was better than that. So numbers are not that bad. And part of the reason is because Russia is in a strong financial position. And again, I've repeated this on other presentations, but it does make a difference that the country came into this crisis beginning of last year in relatively good shape in terms of its balance sheet. And I'm not certainly not going to naively say that was because of sanctions or the actions the government did to survive sanctions, but they were certainly a factor. And the bottom line is that this particular crisis, which is the fourth one that I've experienced since coming to Russia 23 years ago, this is the one where the government was a lot calmer because it did not need to panic. It did not need to cover debt. It did not need to look for money. It had a good balance sheet, and and also it had spent several years looking at different long-term growth strategies, national projects, of course, primarily in that, but export-oriented industries and processing. So it was in a better position, and that showed in 2020. And I do believe, the third line there, as we've seen in other crises, and you can certainly say, I think, hand in heart, and the evidence is there that crises tend to be more positive for Russia than negative, in the sense that they force governments into moving ahead with programs or more positive changes that have been talked about or suggested, been kicked around for years, but didn't need to happen. But crisis every time moves things forward. And at least in the past three crises, we've always come out of it with some improvements on the investment case and the business case, because it needs to happen. So hopefully that will be the same this time, and the indications, I think, are positive for that. I mean, one has to mention the Navalny case because it's all over the headlines internationally. And the bottom line is, I think people in Russia are certainly very familiar with, is that this is not something that's going to create social, economic, or political disruption, as has been talked about in some headlines. And we've got lots of questions in the last week or so from people who are more remote from Russia. On this issue, and I just simply don't see it. And I think anybody who's here in Moscow would say the same thing. It is something we've become used to, these sort of protests. There is a category of opposition. It is slowly getting bigger as the years go on because of demographics, but no way can you say that this is something that could act as a catalyst, for major disruption this year. But on the slightly more positive side, it will kind of reinforce what President Putin had been promising, which is to improve incomes, lifestyles, increase spending in social programs. He'd been promising that anyway last year, and I would think that the response to protests, the response to any kind of threats like this, has always been to try and move forward with these promises to give more money, if you like, to consumers, households, social programs. And again, that's what I would expect. Putin is expected to do, is there to make his Federal Assembly address in next month, in February. And I would expect to, just as we heard last year, a big part of that will be recommitting to supporting families and building incomes, and very much focus on the economy. And 2020, just to wheel back and to spend too much on that, but it is worth bearing in mind, it wasn't just COVID in Russia. It was, of course, problems never come on their own in this part of the world. We had, of course, the triple effect of oil price collapse, then COVID, and then, of course, from the middle of the year, we've had this backdrop of sanctions fears from the US, and that was the primary driver of the ruble, and that had implications, of course, for inflation, and led to a little bit maybe a slowdown, or more conservative kind of stance by government in terms of using resources or budget. And we still have that, I guess, to some extent. But unlike other countries, at least there was general, I suppose, public, I won't say support, that's not the right word, but certainly, no pushback. People, I think, understood that this was kind of more of a global pandemic. The Russian government handled it probably as well as they could, but it didn't lead to, again, any questions of instability. But what it did do, of course, was persuade the government to go back and look again at priorities. And we know that national projects, therefore, are under review, have been under review, are now late in terms of kind of the revised program. We hear, some parts of the revision, and the critical thing is that there's no abandonment of national projects. It's simply the priorities are being kind of changed. That spending programs that can have the biggest bang for buck, such as, for example, infrastructure spending, um, they are, we know that they will continue to be prioritized and maybe even extended, whereas some other programs, perhaps kind of more lifestyle oriented programs, I think will be pushed back further. So it's a 10-year program rather than a 5-year program with different priorities being changed around. We haven't had that yet, but we have had the National Economic Recovery Plan, which does overlap with national projects. That's $100 billion. Again, some of it in national projects. We're now in that. The phase we're now in is the kind of support, the social and economic support phase. And on July 1st, it is supposed to switch over to support for economic expansion and growth. And there's a great deal in that, for example, to try and incentivize companies to invest in export-oriented industries. So again, I would say more net positive reaction. For 2021, some themes. Well, the resource management, that was kind of more like tax threats. I think we had that last year, but the oil price recovery always takes that off the table. And the oil price, last I saw, Brent was trading at 56. Therefore, the pressure to, look for more revenues is that much easier. If the price of oil was $40 or perhaps lower, then you'd hear a lot more from the finance ministry about possible tax changes, and particularly looking at the extractive industries and maybe looking at some excise duties to generate more tax. But that's, Putin, for example, as we know, is very much in favor of low tax regime, kind of across the board. The lower the better. And oil at 56 means that there really isn't much support for any major tax changes, at least not too soon. But that's something to watch. Oil goes up, everything will be easier. Oil goes down, then the pressure for tax might again come back. The national project themes, say we are waiting for that to be revised, but that's still, we had several years of debate about national projects in 2018 and 19. It was being the big kind of strategy or focal point for 2020. It's still there, but it is changing. So we're constantly monitoring this to see where the priorities are changing and see where the opportunities for investors and for co-investment alongside these projects is. And it is kind of evolving. It's not as we had originally thought. This is a document, here's the money, here's the plan, work with it. That's no longer the case. It's now an evolving document. So one that you want us to pay attention to kind of almost on a month-by-month basis. I have brought in some aspects of environment, hydrocarbons, Arctic, because that's now clearly on the table. And ESG, I guess, is the theme there, and very much more on the table in Russia for Russian companies also, because they can now see that having a clear ESG report and having a good score, if you like, in terms of ESG, that broadens out the number of investors that are interested in you. And generally, it's been shown that companies with a good ESG profile and track record are starting to attract a higher valuation than companies at the other end of the scale. So expect a lot more about ESG, particularly in the E and the S. G, in terms of governance, is obviously still a question mark in Russia, and that's not going to be easily patched over, or it's not going to be easily kind of dismissed. There's too much history, and of course the Berings-Vostok case is nearly complete, but it's not yet done. There'll be at least one more episode in the courts. So the G will take longer in terms of Russia Inc. But companies are clearly have a better record individually and are showing that. And in politics, well, the key event, well, I've mentioned, of course, President Putin has his Federal Assembly address in February. I can say, again, we're not expecting much in that other than a restatement of previous commitments. But then that's exactly what I said a week before the Federal Assembly address in January, and that's where we got the surprise political changes, the constitutional reforms, etc., all of which came as a surprise. So there's plenty of, there could certainly be another surprise. But without that, I think the big event this year will be the Duma election in September, because that does matter, because the constitution changes, to remind you, it does start to transfer more power to the Duma. And what that means in practice is that after the new Duma elections coming into next year and going forward, companies should and can start to pay more attention to Duma committees. They will be more important. They have been pretty irrelevant up to now for the last 20 years. But, parliamentary committees are important in most countries, and they will start to be here. So it'll be another aspect, companies looking to do business in Russia, perhaps tendering, looking to navigate or change regulations. Will be Duma committees in the next few years that will start. I guess we could say there's a good chance we will have kind of more protests this summer, as we saw in the summer of 2019, depending on what happens with that Alexei Navalny's court case. But again, I don't see that likely to be anything other than background noise. Geopolitics, I'll decide separately on that, which I'll come down to it, which is worth flagging up. I do, despite what Foreign Minister Lavrov keeps saying, and a fairly aggressive attitude, I suppose, I still think that improving relations to the European Union is very much top of the agenda, as it would have been in 2020 had it not been for COVID. And for investors, repeating what I said, crises have always been good. For advancing kind of changes, we're still waiting for the regulatory guillotine. I mean, it was a buzzword, I guess, this time last year. We were expecting that to be enacted in January. It seems to have come and gone and nothing has happened. But I was told just 2 days ago that we could expect to have that kind of redefined and a new date put on that fairly soon. So again, it's not that it's disappeared. It may have some changes, but there's still a commitment to getting rid of these regulations and inspections, and generally a move towards what can be done to attract investors. And that was the question that I was asked in a ministry just recently. Kind of what are people saying? What are the irritants, etc. So they're listening, and again, that happens after every crisis. And I'm not naively saying that Russia's going to suddenly become a Switzerland or a Singapore or whatever, but it is moving in the right direction, and crises tend to give it a little bit much further along. And the weak ruble, that's, again, regardless of sanctions, I'll talk to separately on one slide. There's no doubt that there's nobody in government crying over the weak ruble. They absolutely see this as as a positive driver for attracting investment into export-oriented industry. So food processing, of course, and agriculture produce has been a very big winner, not only of counter sanctions, but the weak ruble, and generally want to build on that. So no effort whatsoever to try and improve the ruble, albeit there's a sense that the more comfortable level would be about 65 against the dollar, kind of around that range, or maybe about sort of 15% lower than it is right now. So maybe that's about 85 against sterling against a ruble against sterling, but no effort. And we've seen that the central bank has hardly spent a single kopeck in trying to defend the ruble in 2020. Growth, modest projects coming up, but agriculture, food continue to lead. Environment, I mentioned, ESG, etc. I think these are kind of new opportunities that are now on the table. Waste management, for example, I think that's going to be a huge industry here in the next few years. We're finally moving into these sort of areas. Very quickly on COVID, just we've got a weekly report. You see it. If you don't, then let us know. Again, you see it's tailing off. There was a concern up to last week that perhaps that just might have been the holiday effect when getting the data. But now that's not the case. Tight restrictions, border closures, etc., which we've all had to navigate several times, have certainly been effective. And now, as you heard this morning, the mayor has announced that the restrictions on cafe bar closing hours has been lifted as of today. So starting to ease bit by bit, but I guess they'll be very careful if the numbers start to pick up. Those restrictions will come back on. We do this kind of comparison, the bottom two graphs about the excess debt, simply because we get asked about it a lot. And to be honest, I'm not really that comfortable with this, because we calculate worst case scenario for Russia. Like, if every unexplained debt was COVID, what would it look like? And clearly that's not the case. And you can't compare with other countries, because no other country does that either. So if we look at the bottom left-hand graph and say the middle, where you see Moscow, just almost in the middle, that we think is a better representative of where Russia is, with the lag effect of kind of daily COVID numbers, and then about 6 to 8 weeks later you get the broader numbers. Well, if you extrapolate that across the country, you roughly get that middle line where Moscow is, and that's roughly where Russia is on a global scale, roughly in the middle. It's not as good as the right-hand official numbers say, and it's nothing like as bad as the adjusted number, which you say would put everybody who died almost as COVID. So again, a picture that shows, yeah, there's reason to be kind of on a relative scale to be vigilant, but it's not getting worse. On carbon, I quickly go through that. I just really want to put them there to show that this is something we're now covering more. We really do believe there'll be a lot of opportunities for foreign companies in this area, bringing in expertise. It's new for Russia. There's no big Russian company currently dominating that you have to compete against. And I do believe that that the government will, over the next couple of years, allocate more resources, be a lot more serious about its commitments to carbon reduction, to move towards renewables, and there'll be opportunities there. It's good politics as much as good business. Obviously, President Biden, this is one of his big themes. Russia being seen to be kind of in agreement is clearly good politics. We had that with the Paris Agreement that did improve relations with Europe to some extent, albeit now with the row over the definitions, of course, as always. But it is good politics. And even within Russia, of course, the way people reacted to events such as the Norilsk spill and the Siberian fires and rising temperatures, etc., shows there is a genuine, a very broadly based concern. So therefore, it's good politics for the Kremlin and for President Putin as well. And that means it will be more and more and more on the table. And I think it's wrong to be too cynical about Russia's approach to this. The opportunities will be there for foreign companies. And I think looking at this area and getting into it early will certainly be worthwhile. And that's what we say in this slide. And so this presentation is available afterwards. So I won't repeat what I've just said. The last line, though, is worth pointing out, which is that the big hydrocarbon companies, it's on record, it's not secret, whatever, it's public information, that companies like Rosneft, etc., are not on board. They don't think that this is should be a priority. They're very focused on kind of sustaining their existing operations and sustaining hydrocarbon production. So what it basically means is that for Western companies or foreign companies coming into this area, they're not going to be facing that much competition from the local oil companies for a long time, because they're not on board with this, and they won't be for some time. So again, it's something that will happen, but the opportunity is perhaps a little bit better right now. Quickly coming into the economy, just you see the graph there, the pickup last year. The last number we have is for November is minus 3.7. So again, it'll be approximately that for the year. And again, the trend is not that different. I think we've seen from a lot of other countries. The bottom graph is industrial production. And I put that there to show that it wasn't just the COVID lockdown, but it's also the OPEC Plus deal. Remember, from the 1st of May, Russia agreed to cut 2 million barrels of oil from exports. And that also had a big impact on the headline number. And that's also been improving as the oil price has improved, as to be adding back some volumes, and of course, as we move through this year, on the base effect, that'll probably add as an accelerant to recovery once we start doing comparisons. So what it basically means is for the first quarter of this year, expect bad numbers, but I guess that'll be everywhere because the first quarter of last year was okay. So once you get into the second quarter, though, you'll be comparing with the pretty disastrous second quarter of last year, and it'll start to look a lot better. It'll be purely mathematics, but nevertheless, it'll be portrayed as a look at a strong recovery. It's not, it's just a comparison. But anyway, the maths I mentioned also play a factor in this because the skew towards big companies, extractive industries, the state sector meant the decline wasn't that bad, but it also means the recovery will be more modest. So Russia, like a bouncing ball, Russia didn't fall that much and therefore won't bounce that much compared to maybe some other countries, the structure of the economy. But it is, as we can see, moving in the right direction. No red flags to kind of be wary of. It is recovering in a kind of steady, predictable path. And one reason for this quickly on the finance side is that Russia's ended the year with 595 billion of reserves in the bank, FX and gold up, I think, about 40 billion on the year, which considering the year we've had, actually Russia's external debt also went down last year. So when most countries had borrowed more and more to fund their deficits, Russia did not borrow externally. It had enough domestic resources to handle it. The National Fund, or Welfare Fund, as you see on the left, also rose through the year as the oil price recovered, and that money went into that. The foreign exchange reserves was not all about gold. Of that 42 billion, about 25 billion was the gold, increase in the value of gold, and that was almost entirely the appreciation in the gold price. So the idea that Russia was either buying or selling gold, which I've seen in plenty of reports, is simply wrong. The volume of gold bullion did not change hardly all year. The gold price, the gold value is entirely consistent with the rise in gold bullion price. So the central bank basically did very little last year except hold their nerve, which is in a year like last year, that was pretty good. On the budget side, we just had numbers. The deficit is 3.8% for this year. Again, very good compared to what it could have been. The plan was for deficit of 4.4, which literally just got these numbers, so we haven't updated yet. But it was 3.8. And again, I think the deficit for this year, 2.4, maybe that's on the high side. There's a conservative assumption on oil price, or it gives plenty of scope for extra spending. And that's actually what I would expect. If the oil price hangs above $50 for the next few months, when we get to May, I would expect budget revision and more money being allocated to national projects. So really, kind of in terms of one of the themes of this presentation, I think that we are likely to remain in this kind of stable, kind of managed situation, but do not a whole lot for several months. But come May, I think it will change quite significantly, and I would expect a lot more kind of more spending allocation on provided oil doesn't collapse, and also much greater kind of talk about national projects and moving forward. Right now, it's still a little bit early because you don't know what's going to happen the next couple of months with COVID or globally. But I do believe in the sense of talking to people in government and the administration, they are gearing up for May. That sort of May, June time, when kind of their attitude is going to change, provided there's the backdrop is as is. And there is money to spend on this, especially if the oil price stays at anywhere near the current level and the ruble stays kind of weaker than 70 against the dollar. So again, that's there, and it's not there in many other countries. Russia can afford to start putting money. Now, of course, that's not to say that money will be spent efficiently. So I know there's a lot of people who are saying I'm too optimistic. I'm just, in terms of being pragmatic about what will happen, whether that money is wasted or used proactively or efficiently, that's obviously something we have to wait and see. But at least I think we will see that accelerate coming in mid-year, and it'll be focused on export industries. It'll be focused on localization. It'll be focused on creating jobs and improving incomes, as well as the national infrastructure will be a big part of it. Housing, which central bank are already complaining about the high rate of mortgage lending and house building, but that's not going to ease. I think they're basically being told to manage it, but this is not something I would expect the government will try to put a brake on. This is a key part of Putin's commitment, and I would expect house building will remain a very strong sector for many more years to come. And interest rates, well, just quickly on that, so the rate went up. That's partly to do with COVID disruption. Food prices went up, and there's a lot of discussion. Late last year, President Putin basically hauled people over the coals for the rise in sugar prices, potato prices, and basic foodstuffs, which those involved blamed on disruptions due to COVID. But in any case, they've been given fairly clear instructions to handle this and to bring that down. So the central bank's view, which I agree with, is that we're likely to see inflation rise a little higher in the first quarter. So headline inflation, which was just, I think it was about 4.9% at the end of the year, could very well be 5.5. It's not going much higher than that, maybe 5.5, and still should end the year below 4. And that's a reasonable scenario, unless you think the ruble is going to collapse or we're going to go into a massive COVID meltdown again. And that means the key rate should then should again be cut in perhaps late second quarter coming into the summer. The bottom line is, the bottom graph there is actually encouraging. That's the producer price inflation. And that's, is a good indicator of end user demand. So as you saw for quite some time, even pre-COVID, there was weak pricing in this market, and companies were generally discounting across the board. With a cut in capacity and reduction in inventories, that situation has improved, and now we see it's turned positive. So profitability of companies is now improving. It means that the excess capacity and excess inventories have been removed over the last year. So again, that's a positive for at least for companies in manufacturing and services sectors. On the currency, this one is the last year. You can see this graph from the middle of the year. It was mainly sanctions fears, and we have these two drivers in currency. Obviously, either the oil price, if it's moving steeply, or sanctions fears. So if you look at the left of that graph, you see that this is the ruble-dollar exchange rate. So that rapid depreciation from below 70 to this is the euro. Sorry, I apologize. But anyway, it's from 70 to 92 was the oil price collapse. And then as we saw the oil price improving as the OPEC deal was coming together and brought it back down to about 77.5. But then, if we all recall, around July 4th last year, there was all these allegations of the Afghan kind of bounty allegations, etc. And since then, there's been almost a relentless kind of accusations of Russian interference in elections or hacking, etc., all of which have led to threats of sanctions, which remains very much the case today. And that's kind of what has been the more powerful driver of the ruble. Just in recent weeks, though, it is kind of oil price support. We see global currency. I think traders have taken a kind of more sanguine view. In the last couple of weeks, the ruble has been moving more with other emerging market currencies rather than because of something individual. It's kind of more emerging market move. But sanctions will be critical in the next few months as to whether the ruble comes back down into the mid-60s or mid-70s against the euro, or whether or not it will again test those kind of 92.5 highs against the euro or 80 against the dollar. I think the next few months it will be those sanctions, whether they get worse or better. Confidence indicators, again, it just shows, I suppose, people are waiting, so to go too much in that. National projects, I mentioned, this is still the same graph that we've been using in every other presentation. We haven't adjusted it yet because we haven't had the changes. They're now months late. But anyway, what we've been told is it is still the same categories. It's just the timelines and the priorities will change. Infrastructure is still a digital economy. These are the two key priorities. Housing, I mentioned, road infrastructure, part of that, and of course, healthcare, I guess, particularly after last year, but others will change in terms of timeline. We watch this all the time. We provide a lot of kind of analysis and updates for our clients on what we see in terms of changing opportunities and changing trends and changing timelines. So in terms of base case, then getting to the point, well, we've moved on, thankfully, put 2020 behind us, and we now start looking more positive numbers. And as you say, it's not dramatic. We're not looking for a 5% jump this year, but I do think all that's been equal, we can talk about 3%, 3.5% in the next couple of years. I know the economy ministry have over 3% for this year. Look, we're tweaking around the edges, and it's always misleading to place too much emphasis on the headline number in Russia because the economy is too distorted. So if you were looking at a typical SME in Russia, you'd have something like minus 12.5 for 2020, and perhaps plus 10, 21, plus 15, 22. So it very much depends on the industry you're in. The headline number is very skewed by the big state sectors, but you can see that there's nothing dramatic here. Inflation, as I mentioned, staying within the central bank's targets, retail sales picking up this year and more or less gone back on trend. Budget balance, I think it'll be better than that, or we get higher spending. And I don't think our oil price assumption is too optimistic, unless, of course, the Iranians were to come back into the market with the JOSPA deal. If the US would come back to that, then they could potentially put about 1.5 million barrels into the market, and that would be a big problem. But right now, traders don't believe that, hence the prices hanging in the mid-50s. And then I think we have scope perhaps for our currency rates to be improved. I think that's kind of like worst case there. But we do get a lot more detail in the appendix in this presentation over that period, drilling into other areas like agriculture, industrial production, trade deficits, etc. You'll see that in the appendix of the presentation. Kind of moving now quickly to, I know we've plenty of time for Q&A. On the domestic politics, well, we had a surprise last year. I suppose it does mark the start of the transition, Putin's preparation for whatever transition he has in mind. It was a surprise last February. It's possible we could get another surprise in February, last January, next month when he has the 2021 edition. We'll wait to see. But we at least, we got a lot of changes last year, which means it's unlikely we get much more in that scale this year. That process is now underway. We are expecting to see a lot more personnel changes this year and next year at a government level, state agency level, kind of amongst the kind of state elites, as Putin will want to retire a lot of people, I think, before he leaves and make those sort of changes. So that could cause some disruption in some sectors. But yeah, we are told to expect that in the next couple of years. So I say altering the system of control and influence. Without any surprises, it'll be the Duma elections and Duma committees, as I mentioned, being much more important thereafter. We do think that there should generally be a better quality of person in the next Duma because they will have more power. So instead of being a retirement job, it might actually start to become, a job of interest to those who want to, have their voices heard or make a difference. But we are kind of moving in that direction without being overly naive about it. It is a first step in that direction. In the Valley, well, let's see what happens. Obviously, the court case. Plenty of speculation. I'm not going to add to it. If he goes to jail, then we could expect weekend protests of different sizes, probably for most of the summer, as happened in the summer of 2019 and as happened in Tovarsk last year. So, but again, I don't expect anything to be a catalyst that would bring us back, for example, to December 2011 or January 2012. That at this stage does not seem likely, but it is kind of obviously a contentious issue geopolitically, and therefore we'll see what government does about it. Of greater concern to people, of course, are on more economic issues, lifestyles, job security, etc., and that's why I do believe that Putin will again strongly emphasize the government's commitment to rebuilding incomes, rebalancing the lost disposable incomes of since 2014, improving lifestyles. Every single poll shows that that's the major concern. And when you look at those polls that have been also kind of touted about people's willingness to take part in protests, which have been rising, well, we've had the same thing in every economic crisis. If you go back to 1999, 50% of people were willing to take part in protests. And but 2 years later, when the economy was improving, that was down to 20. The same thing, it spiked again in 2009. It spiked again in 2015. So there is that kind of linkage. And I think people in administration understand that if they get the economy right, the political pressure eases. And that's where I think the priority should be. And therefore, for consumer sectors and those involved with, with social spending, with housing, and perhaps the vehicle market, which has been really dreadful the last couple of years, there is definitely reason to be optimism, because people will have more money. And if they also have more confidence, then they'll spend it. So again, I think that's kind of looking a little bit better as we go out. The money is there to do it, and the political will is there to do it. Opinion polls, well, again, just to show, we have not yet had an update for January. The last ones were November. They don't do them in December. I don't think there'll be much of a difference in the polls. And the protests, well, I think we don't really need to go through this too much, just to say, obviously it's a very vocal, active group that supports Navalny. It is not, there's no evidence that it is widely supported, more than that. But, the economic response, the third last bullet point, just to emphasize that, I think it leads to more maybe social spending and greater effort to deliver on economic promises rather than less. But sanctions, obviously the US sanctions I'll talk about separately. We've already had Navalny-linked sanctions from Europe, the CBW. They moved very quickly, so really not much room for additional sanctions from Europe, but we wait for the US. And, in terms of the bigger picture, of course, this is part of the transition that we watch, this between the different groups in government and who's vying for more influence in these transition years. On the regional side, we actively cover the whole Eurasia region. Belarus, far from over, but I think the transition there is underway. And same with elections in Kyrgyzstan, Kazakhstan, the election, expect some changes there. Ukraine, we're following very closely, and the big issue in Ukraine, of course, is whether or not it will get the outstanding money from the IMF, which has been held back because the Constitutional Court reversed anti-corruption measures, and that's a big problem. So again, we cover that. We could spend all day separately on that topic, but it's one that we actively cover and look at the implications for investment in doing business Ukraine. On geopolitics, and then nearly at the end, is, I think it continues to be relationship diversification rather than looking to build one side more than another. There's been a lot of talk about the trade build-up with China, which is clear, but that's energy related to a large extent, and it will certainly grow as Power of Siberia gas pipeline delivers more gas, as China buys more LNG from Yamal, etc. So the trade with China will grow, but it's energy. I still think that there is a kind of reluctance to be too politically aligned with Beijing. There's a nervousness of that. Much more comfortable to be better aligned with Europe, albeit that's clearly going to continue to be difficult. I would expect some concessions on the Normandy format on East Ukraine. Again, possibly it's not going to be there tomorrow, but maybe by mid-year we'll see that being put back on the table. There's already been some tentative talks or discussions about that, but that clearly is the way to improve relations with the European Union, and people in the administration talk about that as something they also expect. There's a willingness to do it for that reasons. And with the US, well, again, the sensible position which we hear is obviously don't expect much for several years, but hopefully a better engagement, and I suppose we're already seeing that to some extent. I suppose the EU is worth pointing out the difference between what I'm saying and what Foreign Minister Lavrov regularly says. He's been unusually critical about Europe and damning about Europe's behavior, which is not like him, and you would say most undiplomatic like. And I don't know the answer to that. People say it's because he's become very frustrated with what's happening around him that he has to defend the Navalny poisoning, for example, or he simply has lost patience with his efforts to try and retire and he's trying to get himself out. And we know that's also possible. But yeah, there is that difference between what he says publicly and what we're hearing, more privately in the administration and elsewhere, which is the focus on Europe. So we'll watch that in the next few months and see what happens. And then on sanctions, on this one, but over the next several months, that is definitely something everybody is nervous about and is watching. And we know, for example, that it's one of the few issues that unites everybody, or almost everybody in Congress, is that Russia should have more sanctions applied. So it's inevitable. And the question is, though, whether or not they will come, whether they will just be more of the same. And there's lots of speculation as to what that might be, or whether it'll broaden out in a new direction. And we already know that President Biden has ordered an investigation into the various allegations, including, unfortunately, the Afghan Gate or the bounty allegations, but in addition to other, the SolarWinds hacking, etc. So we've got to wait for that, and that will be in the backdrop, I think, for the next few months, and to see what the report says. But at the very minimum, absolute best case entire scenario is there will be sanctions linked to Navalny because they're overdue. They're mandated under that legislation. Worst case scenario is we get DASCA, and DASCA, of course, will put a ban on investment into local ruble bonds and would greatly restrict how foreign companies can work in Russian energy and financial sector. So they're both sides kind of the extremes at this point. Reality is it'll be somewhere in the middle, but it will be in the backdrop, and it'll hang over the ruble, and equally it'll hang over investment commitments to Russia. I think we heard a lot over the last several years, companies liking the Russian investment case can see that they will make money in Russia, but simply unwilling to make that commitment so long as that kind of reputational risk, political risk, sanction risk is there. So that's, I think, certainly for the first half of this year, and then we hope it starts to improve. But there is one more round to come. And then last line, though, as I suppose, finishing on a slightly optimistic note, is that at least everything that we hear publicly and privately so far is that that Moscow has no intentions of looking for counter sanctions. It clearly is wait to see what happens. But its response to any sanctions, they say, will be measured and specifically will not, quote, will not make it any more difficult for foreign companies working in Russia or coming to Russia. That's the aim, but clearly will depend on what sanctions do come. So Alf, if I leave it at that and hand it back to you, and happy to take any questions on anything that I brought up or something that I might have missed. So thank you.
Great, Chris. Thank you very much, as always, for a really interesting and in-depth view of the year to come. We've got approximately 10 minutes left for questions. So to the listeners, please put your questions to Chris, as I mentioned at the beginning, either through the chat room, or if you wish, please use the hand up function on the app. To kick it off, though, Chris, can I just ask you a question about Josep Borrell's visit on the 5th of February. What are we expecting from that visit? Obviously significant because he's a very senior diplomat, but what will it achieve?
I think it just kind of starts the process, but I think it just moves the process on. And first of all, I would not expect anything specific. I actually haven't heard yet what if President Putin has already addressed the World Economic Forum, which is today, or whether it's coming later, and what he said. So I haven't got anything on that, but it'll be also interesting to hear what Putin does say in that address. It's obviously all online this year, but his address is today. And then, say the visit, Borrell. I think it's positive in the sense that it's taking place. It's positive in the sense that I think there's a willingness to engage and be more pragmatic on both sides. I think clearly this meeting will be more an exchange of grievances. This is what you're doing wrong and we don't like, and now here's our list. And I think that's kind of more or less what we've been told to expect, and that's certainly what we hear from Lavrov. But I think it's like anything else. If you've had a standoff in any relationship for so long, you kind of have to have the first break the ice one, and then you can move forward and deal with the issues. And that's the way I would look at it. This is the break the ice meeting, and then I think it sets it up maybe for kind of more engagement on specific issues thereafter. But there kind of has to be the first one, and this is it. And that's how I would look at it. It's kind of first meeting after, you know, a lot of criticism last year in the Navalny issue, the CPW sanctions, etc., and disagreements over a number of areas. This, you know, I'm not looking for anything specific. I think this is more a case of we're going to sit down and read each other's lists of grievances, and that's enough for now, I think.
Thanks. Yeah. On a similar theme, were you surprised at the cordial tone of Biden's first talk with Putin yesterday?
Well, look, I guess I'm an Irishman in Moscow, so I'm both surprised and never surprised when it comes to this. I think on the one hand, yes, maybe it's surprised that the meeting or the call happens relatively quickly, because especially after President Biden asked for a full security review of the allegations. You would have thought, well, maybe he might have waited until there was a bit more on that. On the other hand, President Biden does have an agenda, geopolitical agenda that he's promised, and Russia is important in a number of these areas, such as, for example, with Iran, or maybe what's happening in Syria and the Middle East. So, I've used the word pragmatism a lot, and for me it just shows a certain amount of pragmatism is now maybe coming back. Into the, again, it's early days yet. It's hardly the first week, never mind the first 100 days. But it maybe does indicate that there'll be a little bit more pragmatism in this engagement and less emotion, and that's not going to be a bad thing compared to what we've had for the last 4 years. If they can start working through some common areas, then perhaps that might encourage us that there'll be kind of less vindictiveness in whatever sanctions come next, that they'll be more pragmatically tailored, again, using that word again. So encouraging, absolutely. I think the fact that the call took place and it appeared to go well under the circumstances, kind of at a business-like, professional, political level, it seemed to go well. And that's a good first step. But we've still got sanctions to come, of course.
Great. Okay, thanks, Chris. The floor is open, ladies and gentlemen. Please, let's have any of your questions. I'm scanning. I don't see any hands up.
David Gardner's hands up.
Okay, David, sorry. Thank you. Over to you, David.
You're muted.
David, you're muted at the moment.
Yeah, I haven't asked him. David.
Sorry, David, you need to unmute.
Okay. I hope I have unmuted.
Yes, you have now.
Good. Right. I was particularly interested that of all the projects that you mentioned, you specifically mentioned waste management.
Yes.
Waste management is something I specifically am very keen on, having seen the way that Russians treat waste over many, many years, as many as yourself. And we had a particularly interesting visit from a regional delegation just before the pandemic was setting in. In fact, we had a delegation of 24 regional representatives, but we haven't been able to push technical companies and supply companies, engineering companies to really take up this project. In view of the fact that waste comprises roughly about 20% of the value of everything we buy and use, it certainly seems like a project well worth pursuing. And I'll be interested to hear what Mr. Putin has to say about waste management, because he specifically mentioned it in the last 2 years, even putting numbers on the number of plants he wanted to close down and the number of plants he wanted to create. So
Yes.
I don't know whether you've heard anything more than perhaps I'm waiting for.
Okay, no, in terms of specifics, no, but what I could maybe put into a little bit of context for you, I just said is we've been listening to for about 2 years, which basically means we're about halfway through the kind of lead-in process. And, you know, this is kind of one of the, I suppose one of the themes that we are kind of always talking to companies about is how long it takes for something new in Russia to get from this is a good idea to now something is actually happening in a meaningful way. It can take a long time. We had it, for example, in agriculture, when people have heard me say this before, Putin suddenly became aware of the fact that Russia was importing so much food after the disasters of August 2010, and he was kind of beating the table about it for years. It took until the counter-sanctions opportunity in August 2014 for actually anything meaningful to happen, despite the fact that Putin was beating the table and saying it needed to happen. It took years. And we've seen this in many, many different times. And I'm not sure what the reason is. Somebody in administration, maybe once cynically or not cynically, told me it's because it needs to be negotiated with big companies, with the elites, Siliki, whatever you would call them, because people have to make money out of it, whatever it is, whether it's waste management or some other project. Therefore, there's kind of an internal fight over, well, this is my area, and my company is going to be involved, and we'll take the lead, and etc. And it's possible that that's certainly part of it. But what you can say is that there's always a 4 to 5 year period of major change. That's how long it's taken for national projects, for example, to move from an idea to a specific plan. That's how long it took the agriculture sector to move from this is disgraceful to something's been actioned. And I think that I've always said the same thing will happen in waste management. This is a very lucrative business. It's an important business. But the good news is the process is definitely underway, in that there's a lot more discussion about it. There's a lot more kind of senior Russian companies looking at it, getting involved, doing due diligence, perhaps fighting for a piece of the pie. And it needs to happen, because it's not just kind of, kind of making money, etc. But we know it's a big issue for people. Remember, the last couple of summers, there were lots of protests around various waste disposal sites that were just, kind of giving off bad gases and smells, and people complaining about them. And remember, the government's response was in 2019. Somebody came up with a bright idea of digging a big hole in Archangel and dumping it all up there, which then led to massive protests in Archangel. So it's a problem that's getting worse. It's not going to go away, and it's not just an economic problem, it's an environmental problem, and it's becoming a social political problem. So it will happen. And my bottom line, what I say to you, is that this is exactly the time to stay engaged. It's exactly the time to be part of the process, to be close to whoever's involved with it, because it will happen, and it will happen relatively quickly in the end, even after several years of preparation. And as it's a relatively new industry, as it is a brand new industry for Russia, doesn't have the skill sets and technology, there will be massive opportunities for foreign companies in the early years in terms of equipment. So yes, I would do it.
Yeah, okay, it's very interesting, because one of the key areas that people are not so willing in the UK even to talk about is the income stream.
Yes.
And I think that's where you start, isn't it?
Well,
the other expenses come after that.
Yeah, I think so. That's in Russia. again, not to drift back to flippancies, whatever, but things tend to happen when there's something makes both economic and political sense. When you get both, then it tends to happen. And politics can be either geopolitical, or it can be domestic, or it can be internal, elites. And you're right. There needs to be an income stream as well as the social need. And dealing with, obviously a health hazard and something that's unsightly is clearly one driver. But when people are making money out of it as well, then it'll happen much, much faster. I think, the US model is the one I would expect in terms of the private contractors dealing with waste and recycling. I think that's kind of the model that we're more likely to see here. But there's clearly huge opportunity for recycling plants, for managing, for dealing with that, and even right down to more efficient collection of refuse, which is still a long way to go in big cities in Russia. So I do think if we have this conversation in 6 years' time, it'll be substantially different, and it'll be a big industry.
Yes, I've had the benefit of seeing it in the villages around Moscow as well. So I understand exactly what you're talking about. Thank you very much for your view.
Chris, thank you very much for that. Unfortunately, our time has run out, and we will have to leave it there. Thank you for your time, as always, for a great presentation. Thank you to RBCC members and friends for joining us today. And please join us next week on the 3rd of February for our next webinar, which is by one of our members, Schoolgate Accounting. And it's focused for the Russian businesses looking at moving to the UK to do business there. So please join us there. All the details are on the website. But with that, I'll say thank you very much. Have a good rest of the day, and look forward to seeing you next week. Bye-bye.
Thank you very much.
Cheers, Chris.
Thank
Bye.
you. Goodbye.